This week proving to be a positive one for the Kenyan markets. We've got the NSE 20 index back above that 4,000-point mark, and gains largely being attributed to foreign investors here. What are you making when it comes to the conviction behind the upward move that we're seeing?
Foreign investors have been driving the market. I think that much is obvious. For me, I think they're taking advantage of two things. Number one, you've got a currency that was beaten down. The local unit was exchanging at around 85 to the dollar. So for some people who had bull bets on that front, wanted to hold shilling assets. And on top of that, of course, you've got a lot of companies that are trading in single-digit PEs, which probably represented very good return opportunities. So, I mean, on those two fronts, it seemed like a very good opportunity for foreigners.
Of course, foreigners coming in and taking advantage of those low prices on offer in the face of what kind of local activity?
Well, local activity is subdued. If you look at trading in the past, I mean, even this month, generally you'll find that local activity lags, in some cases, foreign activity. And that's largely because investors are able to, because we are largely a retail-driven market, or rather the retail sector it commands quite a big proportion of trading in the market. So when they're not able to buy fuel at the low rates where they're used to, they will reallocate their incomes from savings to consumption, and thereby denying the market demand.
So again, what are you making of the sustainability of the upward move that we're seeing? Do you see foreigners' interest enough to sustain this?
You probably want to if you take a short-term view, you're probably safe. Long-term, it's a bit muddled because too many dynamics. The economy is facing too many headwinds. Perhaps with the help of the Petroleum Institute, we will see that taxes on fuel will come down. And hopefully that will give some pressure and free some resources for investment. Otherwise, the whole picture, we probably need to see the central bank again come in and help in strengthening the shilling, so that the performance of the company is also is stabilized. Otherwise, on purely financials, this is probably a short-term play.
What are you making of the kind of intervention that we are seeing from the central bank when it comes to, movement within the currency space? Because as I was saying earlier, dealers are saying that the reverse repo that was offered yesterday looking like a bit of inconsistent, or presenting some inconsistency when it comes to CBK policy.
I'm not surprised because they also have to think about the costs of borrowing, and tightening will necessarily mean that interest rates will go up, and that will I mean, it might slow down economic activity and also impede the government from participating as much as it would like to in terms of raising financing for day-to-day running. So for me, I can understand their quagmire. They need to tighten because of inflation, but on the other hand, they need to manage borrowing costs of governments and probably other players in the market as well.
Let's look at some corporate borrowing and financing options that are being put on the table. TransCentury specifically has announced that it has plans to sell at least $50 million of bonds once it's listed on the stock exchange later this year to fund its expansion. What have you made of the move there, given the appetite that's out there within the fixed income space?
Well, they should get quite a bit of demand. Like Think Business just did a report the other day, and one of the things they highlighted was the liquidity in the banking sector, which we have known for a while. I think the issues for the success of that issue will probably be hinged upon their pricing and perhaps if they get a credit rating, then they can be placed somewhere. But they announced satisfactory results, and I think there is appetite for more bond listings in Kenya.
What are you making of this option, though, to raise capital via the bond market as opposed to in the equity space once it lists on the NSE? Because there is some incentive that we're looking at where bonds in Kenya aren't subject to withholding tax, right?
Yeah, that's true. But on the other side as well, I mean, for the shareholders, TransCentury, I think they'll probably want a bond issue because that will help them leverage up their earnings, and at the same time allow them to maintain control as opposed to issuing equity where they necessarily must lose control.
Very quickly, East African Breweries, as I mentioned yesterday, shares there leaping up over 2.5%. It's sitting now at around about that 194 shilling mark. What's your view on a player like East African Breweries?
My principal concern is at what stage is the acquisition, the Ugandan acquisition, Serengeti Breweries Limited. My biggest concern is it may not have been, because it was not necessarily, it wasn't a profit-making venture when EABL went in. Now they have to turn it around. Now all the costs that they will incur in doing that will, I think I would like to take I will sit back first and wait for the full years and wait for that investment to mature so that I can come in, because there's the likelihood of probability of bad news when they announce their full year sometime in August, because I don't think that we've given them enough time to turn around Serengeti as yet. And of course, in Kenyan space, we have the issues with the alcohol control bill, the full effect of which has not really been seen, and it might reflect in the full years of EABL. So I'll probably be a bit, I'll hold on a bit in investing in that, and probably look to invest maybe in the second half of this year.